Hello and welcome to yet another Equity for Keeps video. In this video, we are going to cover Virgin Galactic. Of course, you know of recent SpaceX, owned by the sister company of Tesla, succeeded in taking two men from U.S. soil to the space station. That was the first time in 9 years, and it happened that Virgin Galactic is another company associated with such NASA contracts. So in doing a bit of research, we came across this piece that was written by InvestorPlace, or written on InvestorPlace, and the author is, do we know the author? It's Chris Tyler. He's an InvestorPlace contributor. This was written on the 29th of May. That was probably on Saturday. And we're just going to read a bit of this. And if you don't mind, we're just going to read a bit of it. And then go back and see what we can make out of the data ourselves or with you. Okay, let's start over here. Let's start from the top. It might bore you a bit. The industry is shooting for the stars, but when it comes to investing in Virgin Galactic, it's enough to stay tethered to the price chart as well as a smart risk-adjusted position in sometimes hostile investing environment. Let's explain. Space, it's the frontier. And this week we've got a bit closer to exploring those boundaries face than we've been in a long time. Tesla's Elon Musk was expected to send two astronauts into orbit via his privately held SpaceX venture on Wednesday. Wednesday was the 27th of May 2020. It would have marked the first manned mission into space in more than 9 years. However, Mother Nature's called it a launch. For many stargazers watching from the sidelines should be rewarded Saturday when a second attempt is planned and succeeded. But for those that want to participate on a whole other level and where mission accomplished can spell big time profits, it's time to consider buying SPCE stock. SPCE stock, Virgin Galactic, is the publicly traded version of Richard Branson's Virgin Galactic. The venture's angle on the race to space is commercial tourism. And amid the skepticism and worries, there's stronger reasons to see shares as positioned for huge future success. To be clear, right this second, it isn't a risk asset that's going to be vastly appealing. The company's lack of profitability, among other metrics investors find useful, is certain to keep many looking the other way. Nevertheless, Virgin Galactic is positioned as the kind of investment that could eventually yield a multi-party return. But don't just take my word for it. InvestorPlace, Louis Navellier, the guy who knows a thing or two about finding massive ground floor investment opportunities, is on board with SPCE stock. A March recommendation has proven early, but with his bullish thesis largely intact, today's investors are reasonably at an even strong advantage, and Louis isn't the only bullish on Virgin Galactic. Okay, it's mentioned here that Richard Branson sold 2.6 million shares earlier in May, and the sale, which netted in the neighborhood of $500 million and reduced the founder's stake by 22%. is being used as a lifeline to support his other global non-consumer driven businesses hurt by the novel coronavirus. All told, the headline fails to tell the whole story. Okay, so similar to most growth stocks in the earliest phase of being introduced to investors, SPCE stock has seen euphoric highs backed by unsustainable optimism followed by end of times like bearish behavior from Amazon, Netflix, Nvidia. It has happened to the very best of them. To be fair, the next pair of those storage journeys, which delivered massive future returns, is the more difficult task to replicate. But SPC stock is in position technically to right now to begin its launch higher. Okay, so today's forecast is calling for a price target that breaks above the 38% retracement level, which acted as a resistance earlier this month. Specifically, I'm looking for shares to reclaim the 50% to possibly 62% levels in the second half of 2020. Okay, so he's quite bullish. So with that in mind, one favored way to position for your own potentially multi-badger with vastly reduced and limited risk is the October $23 and $30 bull call spread for about $1.15. This also requires much less risk from SPCE. Okay, so we have here that the market is currently trading, so some of the figures we have here might still be very much the same, previous close and all that. Yes, they'll still be very much the same. So you have the put call ratio of 0.3 for 1 day and for 30 day, all 0.3, indicating that option traders are very much heavy on the call side of things. And we can also see here also that we have a short interest of 11.9%. This figure may be something else, maybe higher, maybe lower, but if you have a figure like that, 11.9%, and we have a market cap of $3.6 billion, we're looking at up to 336 million dollars in buying back ammunition. So we come over here and look at its chart. So we can see last time I refreshed this not very long ago, it was trading at 1796. So and so if we consider the simple moving average for the last 20 days or the last 28 days, last 20 days we did the last 20. Okay, last 20 days will be it has been last 20 trading days. So we did a bit of an analysis here, and we got 1791 as a simple moving average for 20 days, actually 21 days, 28 days. So we got 17.9, and they have over here 16.97. So not very much, not much of a disparity as such. We have a disparity of about 4. So $4. $0.4 rather, $4.4 I think. So yeah, that will be okay. That will be 0.15 dollars. That's the difference between what they have and what we have. And then the standard deviation is 1.33, And then one standard deviation, which is a double of that, is 2.68. And then because of that, we have to get the price range for where, if we want to determine if the price of the current price lies between one standard deviation, then this is the range. So the current price 17 point as it is traded. The last time we refreshed it, it was 17.94. So based on that, it doesn't fall within one standard deviation. It's fallen it is below that, but it probably approaching that. So do we have any recent pullbacks? Yes, we have a recent pullback, even though of late we can't exactly say. We can't exactly call that very recent, which is 21st of May. So obviously we know that things are generally trying to improve, and so given that this space launch occurred, and also given that it has broadly it has pulled back. You can see that. When did this serious pullback occur? It was 18th of March. So maybe we can call that quite recent, about roughly 2 months ago, thereabout, or more. So given that it has pulled back, and also given that it has this put call ratio and short interest, and also the optimism around or rather the sentiment and optimism as well around so many retail traders, well, including ourselves, maybe or maybe not, about the prospects, of space Virgin Galactic, and the interest. It's gradually building up a cult following. So given all of these things, all of these factors and all of this facts, because we have this pool call ratio here and the short interest, all they are facts. They are not speculative. They're not speculative figures. Given all of these things, we can see that we can continue to say, like we said earlier on, that yes, it is a stock that you should watch. It is a stock that has a potential, given all that we've mentioned, to keep rising, especially as we have seen this recent space launch and all the other things as well. So yes, they have a contract as well. So it's not just about space tourism as well. They have a contract with NASA to even provide certain services. So given that and all the other things we've mentioned, we can say yes. Don't take your eye off Virgin Galactic. Don't take your eye off Virgin Galactic. So we'll continue to cover this space, this Virgin Galactic space for you. And thank you very much for watching this video, and please subscribe to the channel.